9 years, the Prime Minister has put all his eggs in the resource extraction basket. For 9 years, the Prime Minister has fed into a cycle of boom and bust. He's left our economy at the mercy of falling oil prices. Now the bill is coming due.
That's NDP leader Thomas Mulcair blaming Prime Minister Stephen Harper for relying too much on the oil sands. He says it makes Canada's economy vulnerable to falling oil prices while sinking prices. It's been helping drivers, but well, the loonie is being hit hard. Today, the Canadian dollar sunk to a 6-year low, hitting 78.61 cents U.S. Executive Vice President of CHF Capital Markets, Mark Lackey, joins me now from Toronto. Mark, I want to get into the job cuts and all of that in a minute and where the loonie is. But let me start with this. Justin Trudeau's been saying it. Thomas Mulcair has been saying it. Well, the economy's in the tank because Stephen Harper put everything into the oil sector. Is that accurate? I mean, as far as I remember, Stephen Harper doesn't control the Canadian economy for good or bad.
No, you're absolutely right. And if we go back in time, it reminds me of the old arguments that I can remember when 90% of our trade used to be with the United States. It's now about 70% of our exports. And people said, well, we rely too much on the United States. But for a whole lot of years, and most of the time, that wasn't such a bad situation. The rest of the world was envious that we had this advantage of trading with the United States. So, at the end of the day, it's not just oil. It's all kinds of factors. And I would point out one thing to all the critics of the present government, that the fiscal position in Canada is better than any other country of the G7 or G8. So I think that's what people should be looking at, as opposed to the fact that, as you point out, we don't put all our eggs in the basket. It's not just the oil business that drives this economy.
Monty Solberg was on the other day. He said oil is 6.5% of the Canadian economy. Add in mining, it gets up to 8.5. Manufacturing is still 11, and leasing and finance and so on, it's 13%. So
that's exactly right.
Misnomer completely. But the Canadian economy is hitting some problems, and we can look at the major job losses. Target, 17,600 employees laid off. Tim Hortons, we believe it to be 350, and CIBC 500 in the past 2 weeks. Is that a sign that we need to be worried, or is this just part of the natural cycle? What's going on?
I'd be far more worried if every one of these is kind of, certainly in Target's case, I mean, they came to Canada and they weren't successful. So to me, that's not really a reflection of the economy. I mean, I'll leave that to retail analysts to discuss what they should have done or could have done differently. But I think that most people would argue that it wasn't the retail sector being so weak that caused Target to exit Canada. And I think that when you look at Tim Hortons, I mean, you went through a merger. I was in mergers in the oil business and in the brokerage business, and you're always going to see some job cuts because there's redundancies. I mean, that's the reality of the situation. It's one of the reasons why some mergers occur is because you're able to cut costs because you don't need 50 accountants. You've got 25 and so forth. So I think that in the bank's case, I mean, they're always doing some restructuring. Remember, CIBC has a whole new senior management team. They've made major changes. So they're going to drive the bank the way they want to drive it. And then 500 jobs out of what, maybe 30,000 or 40,000 people, to me, that's not too significant. I'd be far more concerned if it was much more widespread across a lot of industries. That's when I think that I'd be far more concerned about these job losses. To me, these are somewhat special situations.
All right, now let's get to the point that's good for snowbirds, bad for snowbirds, good for exporters. That's the Canadian dollar. It closed at 78.69 cents, so a slight recovery from its absolute low earlier today, but that still seems shocking. Is it a sign to worry?
Well, I've never, I go back to the days when we had the dollar at 63 cents, and that's, we're going back now a little bit more than 20 years. And not a lot of people kept telling me this is a great thing for Canada. But I think you have to recognize that while it does help exporters, it obviously hurts us on imports, and everybody has to eat. So I think people should remember that throughout a good part of the year, we have to rely on imported food. There's a lot of other products and services that are imported as well. So, I'm not fond of a dollar being down here, but I recognize two factors. Number one, the Bank of Canada cut interest rates. Number two, we are tied not just to oil, we're tied to commodities. But I will say one thing that's far different about the dollar right now, when the last time we had a very weak dollar, was that we had a really bad fiscal position in Canada, and we don't have that anymore. So there are some aspects that would indicate to me that while the dollar may go a bit lower, I do see some potential, certainly for recovery in the next year or two. largely because I think oil prices actually will rebound as we go through this year.
All right, Mark, good to see that somebody's optimistic about the Canadian economy. I'll try and keep my chin up. Thanks so much.
Absolutely.